Welcome to the Passive Income Podcast. I'm your host, Dividend Dave. Thanks for being here. Thanks for checking us out. Thanks for clicking on that button to play this video or listen to the audio. Super excited for this episode. Joining me is Alexander. Alexander, please go ahead and give yourself a bit of an introduction.
How are you, Dave? Doing great over here myself. Yeah, Alexander here. On X, I go by Alexander the Investor. That's my name over there on the platform. I met you as we all meet many others on the financial community over there on X, which is just an awesome platform and an awesome community over there. Here with the same intentions to just continue to expand our community, network with each other, and do what we're all on X to do, is to share our financial thoughts, to help each other build our wealth and help each other become financially free. So that's the goal, and that's why we're here.
Yeah, that's awesome. Yeah, I definitely will have that link in the description for your X Twitter handle, Twitter/X handle. And yeah, let's just get into it, I guess. So you are in the Eastern US, if I'm not mistaken.
Yeah, in the Mid-Atlantic in the United States. So also happy to be doing somewhat of a international or inter-country mix-up right here. But yeah, been in the Mid-Atlantic pretty much my entire life. I've obviously visited and traveled other places, but I've always lived in the Mid-Atlantic of the United States. So yeah.
Nice. Nice. Yeah, definitely international. Everyone knows I'm up here in the Great White North, Canada. So
You can tell. You can tell.
right. Well, I guess let's just get into, yeah, like you said, the X community, the financial community on X is just fantastic. Everyone encourages each other. I've had literally hundreds of guests from the community on the Passive Income Podcast, and so many great stories and backgrounds, and so much that we can all learn from each other. And like you said, that's sort of one of the goals in the community, is to share our thoughts and ideas with each other. And yeah, I guess maybe just start at the beginning of tell a little bit of your story or your journey. What was the light bulb moment for you when you realized, because we've all been there, where it's like, when you're a kid, whether you're in your teens or 20s or even early 30s, and you realize, oh, I'm spending more than I make, I'm in credit card debt. Or I'm not saying this is your situation, but
Yeah.
I've heard the story before. I've seen that movie before so many times, and everybody has that light bulb moment of like, whoa, I need to do something about this. So yeah, I guess just maybe start telling a little bit of
Yeah,
your
so
story
I
if you
mean,
don't mind
I
sharing.
think for me, it kind of it goes all the way back to when I was a kid. My upbringing. My dad was an immigrant to the United States. He came here when he was a little kid. Didn't speak English, didn't have any money, came from a pretty humble beginnings, and he met and married my mom, and she had a pretty humble life as well. Um, so just I don't want to say I grew up poor, because I didn't grow up poor. They both worked hard. They did great. They provided for us wonderful. So I'm very blessed and thankful for that and grateful. Um, I think we were taught young, um, to work hard, to that nothing was going to be given to us. That things are expensive, that
Yeah.
you have to earn your way, and et cetera, et cetera. I could keep going on and on. So I've always kind of been a hard worker, or someone that's just trying to go out there and do the grind and just make my money and do what I need to get by. So provide for myself. And I think my dad taught that to me and my siblings, that at very young ages, that no one's going to give it to you. You're going to have to go out there and get it yourself. And after I went into college and graduated from my undergrad, I always had a passion for finance, and that was not necessarily something that my dad or my parents taught me. I think that was just something that was innate with me. I just always loved the idea, of why businesses are successful, how
Right.
they're making money, what they're doing to be so successful. And I have 2 degrees. I have an engineering degree as my undergrad, and I have now an MBA too. And there's a lot of people that hate on MBAs, and sometimes I laugh about it too because I think they're getting maybe a little bit too diluted out there in the world. But I'm also a little bit of an educational nut. I just love to learn. I love to
Right.
just continue to enhance my education as much as possible. And I've always known finance is important. So I don't necessarily know that I had a light bulb that went off and said, "Oh, I need to change something in my life." I just always kind of knew, like, hey, if there's no one's going to do it for me, if I'm ever going to get there myself, I'm going to need to do it. And investing is one of the ways that you can sort of supercharge your way into a little bit better of a financial situation,
Yeah,
because no one's going to give it to you.
just
So.
to satisfy my own curiosity, what country did your dad come from?
Yeah, my dad's an immigrant from the country of Cyprus. It's a
Yeah.
small little island country in the Mediterranean. It's a split country right now, so we'll not get into that. But it's half the country is Greek by origin, half the country is Turkish by origin, and we're from the Greek side. So,
Okay. Yeah, I'm
I speak
familiar
a
with
little.
where Cyprus is, like geographically, like you said,
It
is
is.
the
It's the
island.
easternmost island in the Mediterranean Sea. So, Spain has their few islands. Italy has their few islands. Some of them are big, like Sicily, et cetera. And then Greece
Yeah.
has hundreds and hundreds and hundreds of islands. And then all the way in the eastern side, it's actually pretty close to like Israel, Syria, Egypt, Turkey. There's an island country called Cyprus. So not very well known, but it's there, and we're
I'm a bit of a
ethnically.
geography nerd, so yeah,
Yeah,
I just happen to know where that is.
yeah,
Um,
yeah.
no, so that's great that you never really had to experience that light bulb moment. Like you said, you had that instilled in you in a very young age that it's not going to be handed to me. Anything that I get in life or earn in life, I'm going to go out there and earn it for myself. And that's
Yeah, and
probably
I,
a
I will.
great life lesson right there in itself, right?
Yeah, and I will say I struggled in my 20s. Don't get me wrong. So my dad was also the type that was like, you're 18 now, I'm not supporting you anymore. Go out there and do what you need to do to take care of yourself. And while that was challenging at times and maybe a little bit harsh, a lot of valuable life lessons learned. I had student loans from undergrad. I had an entry level salary, albeit decent. I still had an
Right.
entry level salary, debt. I had to go buy my own car. I had to pay for my rent in my apartments. I was broke for years in my 20s, years and years and years,
Yeah.
living like you see some of those funny memes on Instagram where it's a guy just got a mattress on the floor and a TV on the. And I mean, I did that. That was my 20s. I was a broke 20-year-old guy just trying to figure out his way in the world. And luckily I matured and kept going to school and figuring things out and increasing my income enough to get myself into a much more stable situation. But had to
Right.
figure it out the hard way, I think.
Yeah, and I think even I, I'm not sure how old you are, but um,
Mid
you,
30s,
you hear
mid
that
30s.
story all the time of like the student debt and struggling to get by, and just making ends meet to pay that rent, buy the groceries, like you said, get some probably some beater card, and but you
Yep.
still got to pay for the insurance and gas and whatever else,
Yep.
right? And
It adds up.
hopefully you weren't paying a car payment on some like $100,000 Mercedes or Porsche or something like that. No,
No, no,
definitely not, right?
no. But yeah, I mean it's not easy, and that's why we see. That's why nowadays you kind of see it. Like there's so many people out there that are struggling. Because there's just too many expenses. It's expensive. Everything costs so much. B, they don't have a high enough income, and whether that's something they can control or not, it's just the fact of the matter. Our incomes are incredibly low on average for most
And
people across
inflation has
the.
been a killer these last three,
Inflation's a
4 years.
killer. And I would say a majority of human beings, and this is something we talk about a lot on X, a majority of us are not financially educated ever in our lives as to what to do, how to make decisions, what to look for when you're buying a car, when you're buying a home, when, credit card debt, student loans, all picking a college, there are dozens and dozens and dozens and dozens of decisions that you have to make
In
from the
fact,
time you're 18 to for the rest of your life. And they can have substantial impact on whether you're going to have a chance to just get there or not. It's a struggle, and it's unfortunate what some people go through. But
Yeah.
I try to do my best to educate myself and make as best the decisions I can think of. And they're not always right, but I'm
Yeah.
doing something about it.
Yeah. So because a million people have not subscribed to the Passive Income Podcast on YouTube yet, so click that subscribe button. I still work a day job, and I've
Mhm.
come to the conclusion. I haven't like done the math, but I think it's pretty easy to say, even though I've gotten a few nice raises over the last 3 or 4 years, I'm actually making less money today than I was 4 years ago.
Yeah.
With like, you factor in the raises, but then you factor in the inflation, and you're like, my raises have just not kept up with inflation at all, right? Like,
Not even remotely close. And I don't want to get into the specifics of it, but I mean, there's the inflation numbers are issued as they are. It, to me and to many others, it seems like it's way worse than what they're telling us. And I'm not going to go down that rabbit hole. We can if we want, maybe another time. But the
yeah,
inflation
yeah,
across all major goods and service categories, it's brutal. It's been crushing people. And while companies are printing record profits year after year, they're still issuing their low raises. I've only myself, like I believe last year, maybe got a 3 or 3.5% raise in my 9 to 5. I would say the one thing that has significantly helped me and I'm married, so both myself and my wife was both having since COVID changed jobs. The raise that came from that alone
yeah.
is enough to overcome inflation 4 or 5 years running.
Oh,
So
that's good. That's
I would
great.
say, just if job markets are hot to people, I always say, don't be afraid to look elsewhere, because you're probably could get a lot more on the open market than you're making currently. And you got to look
Yeah,
out
that's
for
great
you, because
advice.
again, you got to look out for yourself and make the best decisions for yourself, because most other people and your corporations are not going to do it for you. So
Yeah, that is great advice. I do kind of want to get into, I guess, a little bit of your portfolio. Obviously, not specifics. I don't need
sure.
to know exactly how many shares of every single company you own, but I'm just kind of
Yeah.
curious, like maybe like sort of your favorite sector. We had Tesla earnings calls here. Just was that today or yesterday?
Yesterday.
And
Yep.
um,
Yep.
the big set or the Mag Seven tanked the Nasdaq or tanked the S&P today, or I'm not even sure which one. I was glancing at it, not close enough, but
The
um,
Nasdaq got hit hard today, I
right.
believe. Yeah. Yeah.
So I guess I don't
Um,
know. Are you like you said engineering background and MBA? So are you into those like the tech stocks, or that was sort of my first thought, just being 110%
what's
stereotypical, like,
funny?
oh,
It's like,
engineer, he's probably right into those types of companies.
and again, this I'm gonna rewind a little bit, answer something, and then get back to your question, because it's like, I think about it now, looking at my portfolio now, I'm very at least satisfied with how it's made and how it's built. And I can say that I'm there now in my 30s, but I probably could have been there a lot earlier if I hadn't made such silly decisions when I was younger and in my 20s and didn't know what I was doing, and chased a penny stock or listened to the hype online about something. Or so
Yeah,
advice to young new investors: don't chase some ridiculous, hyped stock that you see, or
yeah,
some meme stock. Don't try and get rich quick on small cap stocks that you've never heard of and are not profitable and probably won't be profitable for years. um, what else can I say? Just don't buy things just because they're cheap. Uh,
you get
or
what you pay
if you have a
for right
hundred
off.
dollars,
Right.
don't buy 10 shares of a stock that's worth $10 because it seems like you're buying more, when you could buy one share of a company that trades at $100 and is a large cap, cash flowing, profitable machine. So I wanted to say that first, is I made some dumb mistakes when I was in my 20s, because again, on my own, just kind of try and figure it out,
Yeah.
trying to invest, trying to learn things. And boy, did I make some dumb mistakes when I was in my 20s. But that's kind of helped me
That's
get to where I'm at today.
I was just gonna say that's a big part of the learning curve where I'm
Yeah,
sure 99.9% of us go through that with like chasing the penny stocks, looking for something that's like, oh, if I buy 1,000 shares of this at like even less than $10 at like $1, and you're
a
like,
dollar. Yeah,
and it's gonna
sure.
go and it's gonna like skyrocket to $10, and then
Yeah,
you don't get a
not
lot of those
worth it.
10 baggers on penny stocks, like rarely, right?
No,
So it's really
it's
tough
not
to chase
worth it.
penny stocks.
So, but like to answer your question, I mean, I would say my primary largest positions, believe it or not, and I love building individuals. I love building my portfolio, which does consist of hand-picked individual stocks. But in like my retirement accounts, so like my 401ks and IRAs and whatever, I do stick purely traditional large cap S&P 500 index fund, extraordinarily low cost, like 1.5 basis points, purely mimics the index. That is my bread and butter, largest positions for sure. But then I do also have, a brokerage portfolio, which is purely invested in individual stocks that, like you have, like we all have on the financial community on Twitter. We're finance junkies. We like to go out there and look at companies and read earnings reports and,
Yeah,
follow
do
the latest
the
news,
real boring stuff. If it's boring,
the
it's great.
really nerdy, boring stuff. And then, using to the best of our abilities, without supercomputers and all this other inside information, just purchasing what we think are good, high quality companies that are profitable and cash producing and pay a decent dividend. I know dividend investing gets a lot of hate sometimes by some people, and I get why people can have their opinions on that, but
Yeah,
for what I think me, you, and a lot of other people on X use dividend paying stocks for, it's an outstanding thing. So, I
yeah,
have I have all different types of sectors. I don't limit myself to any specific sector. Again, it's to me, it's more about finding good quality companies that are trading at reasonable value levels, um, and just buying them and sticking with them for long periods of time and just keep reinvesting continuously.
yeah.
So,
Well, and that's the big thing, right? It's just reinvest the dividends. The dividend is a little bit of a cash machine. Like just keep whether it's a $5 dividend or a 10 or 50 or 100, you just put it back in. Just put it back in and keep growing that snowball, as the saying goes. I do want to pick your brain a little bit about uh, you mentioned ETFs off the top of those, as like you said, your words, bread and butter. So yeah, which ones? Like SCHD, VOO, SPY.
yeah, I mean, SPY, VOO. I mean, those are kind of pretty much the two of the best in the industry in terms of like traditional index funds. There's the Vanguard one, I believe it's VTIAX, and then there's the Fidelity one, FXAIX. So I'm pretty sure those are like their flagship large cap S&P 500 index funds with the like 1 to 1.5 2 basis point fees that
Right.
mirror the index, that pay their quarterly dividend to you. And those are some. I don't think you can really go wrong. The whole point is to continuously dollar cost average in over time, year after year, month after month, quarter after quarter, and not worry about a thing. And you look
Yeah.
10, 15, 20 years pass by and you're like, whoa, that was awesome.
Yeah.
Yeah.
I got to get your thoughts on JEPQ as well, and I'll tell you why. If you might already know why if you've seen my posts recently, but what are your thoughts on JEPQ and JEPI,
Uh,
I guess as well?
I see the intrigue that people have towards them. I don't personally own shares in either JEPI or JEPQ. Um, I know a lot of people do. I don't dislike them. I like them. It's definitely they're on my brokerage platform. I like to keep a running list that I call my watch list.
Yeah,
They sit there, and I have it broken in different categories. There are ETF category, there's a dividend category, and then there's just kind of a general category. So those two are on the list. They've always kind of been on the list, and I do track them and monitor them from time to time. I love the idea of uh, a fund that writes covered calls for additional income on top of the shares that they hold within the fund. So I think they're good. I think they're great. I think they offer exactly what they're meant to, is higher income than you would normally get on, a particular, say, index fund or something like that. So personally, don't have any issue with them. Personally, don't own them. Could I in the future? I definitely think I could. I don't like to. There are some people on X that are, just such stubborn truthers that you should only be investing in this and this only, and it's got a higher total return over the past 5 years than this, and if you invest in anything other than this, you're a dum dum. And it's like I don't mess with that. To me, and it might be stupid, but to me, it's like I just want to know that I'm making money, like, over the long term. And there are many, many, many ways, companies, ETFs, index funds, to be able to do so. Growth companies, income-based companies. So everything always, to me, boils down to what is your preference, what's your goal, what are you trying to achieve, and that's it. I don't like to be rigid in my mindset. I like to keep an open mind and switch things up and try new things if it makes sense for me. So, I hope that answers the question.
It does, yeah. And I'll tell you why I was curious is because so for so long now, I had only invested in Canadian companies. Obviously, we have great Canadian banks here. We have some other great companies to invest in. And for so long, I've been like, I really need to invest in the U.S. Like, obviously, right? Like, the largest economy in the world. You've got like so many. You just look down that list of the things like the Coca-Colas and the McDonald's and the Costco's and the Walmarts, and like the list just goes on and on and on and on. And then, all those tech stocks that I was referring to earlier. And so JEPQ, I'd have to give a shout out here to Mistress Dividend. I'm not sure if you follow her on X, but I keep seeing her like for the last month or more, or 2 months, like every single day she's buying a little bit more JEPQ. And I'm like, okay. So finally one day, like I think it might have just been earlier this week or late last week, I'm like, I need to look this JEPQ up. And then I'm like, oh my goodness, the top 10 holdings in JEPQ are like Microsoft, Apple, Amazon, Google, Meta, Tesla, and whatever else was in there, NVIDIA, I think. And I'm like, oh, okay. I'm like,
yeah, the love I see
now. I'm like, instead of me as a Canadian trying to invest in all 10 of those like top companies, I'm like, well, why don't I just start buying shares of JEPQ? I'm like, so I did. I did earlier this week, and I bought 2 more today, to be honest.
Nice. Totally. Again, reeling back to how I started this, it's like, especially for newer investors, maybe that's the best way for them to get started. Don't try. You don't even try and pick individual stocks. Just buy a few different index ETFs, or like you said, covered call index ETFs, and just test the waters with that and see what that's like. And then look at the companies that are being held in those funds. What are the largest positions in those funds? And why are those companies being invested? And who's the biggest institutional owners in those funds? And, I hate to say, you do need to do a lot of research on your own. So it does take time. If you want to build your own individual portfolio, you really need to put the work in it, because just willy-nilly picking stocks is a little bit of a dangerous game. So the big funds are probably the easier way to go. But yeah, I mean, at the end of the day.
Well, and honestly, I'm going to give another shout out here to Craig, SCHD Stan, or I think his actual X handle is SCHD ETF, maybe is his X handle, but he's been on here a few times as well. And, I was very, very close to, buying SCHD as my first US holding, because again, you look at the basket, like what's inside that basket, you're like, oh wow, there's just a ton of incredible companies in here, and it wouldn't make sense for me to try to invest in all of these companies individually, right?
Yeah. No, makes perfect sense. I think SCHD might be the most popular one I see all the time on X. I think people are constantly talking about SCHD. So
yeah. So honestly, like, probably 6 months ago, I had like my 3 that I was going to start a U.S. position and was like, it was going to be either be SCHD, Realty Income,
Mhm.
or Coca-Cola. And
Yep.
I never pulled the trigger on any of them. I'm kind of glad I didn't on O. I honestly would not have regretted Coca-Cola or SCHD either. But like I said, when I finally got turned on to JetQ, I'm like, look at these as like the entire Mag 7 in their top 10 holdings. I'm just like, how can you
Yeah.
not? And again, that's my decision. I'm not saying not financial advice for anybody else to go ahead and do it, but
I would say, I mean, it's been lights out for the last few years, and I know 2022 ended pretty poorly, but like if you were disciplined, stayed consistent, continued to invest, bought high quality companies, I don't know how you could have lost money over the last couple of years.
right.
It's just been a rocket ship of a bull market. So I hope many out there also experience the same thing. So
I think
it's
that's
been pretty
another
nice,
thing.
and it's finally looking like there's a little steam's blowing off the top, which is healthy. We need it a little bit, but
Yeah, I was just gonna say that's another thing we really need to point out is everyone looks like the greatest investor in the world during a bull market, which
yes,
we've experienced now. Like we had, like you said, 2022 was quite the somewhat bearish market, but still wasn't really that bad. And
yeah,
we've really had 4 years other than that kind of bit of a slide in 2022 and some of 2023. But yeah, now mid 2024, it's just been going gangbusters, right? And
yeah,
everyone looks like the greatest investor in the world because yeah, I bought a stock and it skyrocketed, or maybe not. Like I don't mean like a 10x skyrocket, but even if it goes up by whatever 10 or 15%, hey, you're doing pretty good, right?
sure, yeah.
So,
It's been awesome for sure.
and I think it's kind of fair warning that that doesn't last forever. The market has cycles; it goes up and down, and you know when you get to that point in the market cycle, just zoom out and say, well, over 20 years, whatever market you're looking at, whether it's the Nasdaq, the S&P, or here in Canada, the Toronto Stock Exchange, or globally, like the FTSE or wherever, right? Like just to zoom out, what does it look like over the course of 15 and 20 years? It's like up and to the right, every one of them, right? So
Yeah. It's funny that you mentioned the footsie too, because both the foot. Oh, this is something that has been in my career beneficial to me as well. And excuse me. Two of the previous companies I worked for, one of them was traded on the footsie. One of them was traded on the Swiss stock exchange. So I believe it's the SWX. Um, both of those companies at the times I was working there offered, they're called employee stock purchase programs.
yep,
And if anybody out there hears this and is working for a publicly traded company, please go and try and find out if your company offers one of these. They're programs where your company allows employees to buy stock typically at a discount. In the past, I've gotten 15-30% discount on the cost per share, basically as a deduction from your paycheck, as you would if like your 401k.
yep.
So you can purchase blocks of shares of your company at a discount. So I was able to do that for two separate companies I worked at previously, and then you just hold them for as long as they're decent companies. Again, it goes back to, is your company worth investing in to begin with? Don't just buy it because it's there. But you know, I've moved on from both those companies since. After 3, 5+ years after working at those companies, those shares which were purchased at a discount, it's free money, it's
Yeah.
free return. So that's something that was able to help me, I think, take the money from that and reinvest it into building how kind of some of my portfolios today. So just something else to think about for people. It could be right under your feet the whole time, the company
Yeah.
you're working for.
Yeah, definitely. I think that's a great point. So yeah, if you do work for a large company that's publicly traded, definitely look into that if you haven't already. That's a great point.
Yeah.
Now you also mentioned okay, kind of moving on from the ETF side of your portfolio, you also like to pick some individual stocks. Obviously, there's probably a little bit more work in that. Like obviously with the ETFs, professional money managers handle those, and if If a company isn't doing well, you just drop it out of the fund and you add a better company back in. That's what they get paid to do. They're there all day, every day doing that. When
Yeah.
you're picking your own individual stocks, you know, we don't have the time or resources that they have, to be quite honest. Well, we do have the resources these days. We have Google, we have YouTube, we have everyone on X that's more than willing to give their opinion. All you got to do is say, "Hey guys, what do you think about this company?" And you're going to get a lot of opinions about it, right?
Yeah.
So I'm just kind of curious, what are some of the individual companies that you like?
Yeah. So I'm a huge fan of REITs. I don't know, again, like with everything, I guess there's their love hate. I particularly like them for my portfolio. Again, they pay great dividends. So for anyone who's trying to build a good income portfolio, the REITs are great. Real estate investment trusts,
Yeah,
by law, they're obligated to pay out a certain amount of their income as a dividend to their shareholders. So you're
yeah,
getting
like
consistent
90% or
dividends.
something.
Yeah, I think it is 90%. And you'd be surprised how many REITs are out there. You know, I own Prologis, so PLD. If you drive up and down most major highways, at least where I'm at in the Mid Atlantic, massive warehouses all over the place. So they're part of the logistics and supply chain industry. Um, Another one I own, Extra Space Storage. So I own EXR. Everybody knows those self storage buildings that you see all over the place. So another company that's, and to me, I just look for what I look for in a REIT is, stable and or growing revenues, stable and or growing income, net income, profit. And then, just reading through their quarterly earnings reports to make sure that, the strategy still makes sense to me and that the company looks like it's still on the right trajectory. As long as the underlying financials look safe, I know that dividends not in danger whatsoever. So I love REITs. I have more than just those two in my portfolio. I have a few others.
Realty Income.
What's funny? I don't own Realty Income or Triple Net Lease, the NNN one. So I know those are two on X. There, people love those ones. And again, it's not that I have no issues with them. I just haven't put those two particular ones in my portfolio individually. But yeah, I mean, to me, REIT's great. They're great, solid, stable, usually pretty decent dividends coming from all of them. So very satisfied with the performance of the REITs in my portfolio. And then, you never want to say timing the market. It's not. I don't encourage anyone to try and time the market, but I've seen a couple other people also post about this, but back in the spring of 2023, so about a year and a quarter ago, when a couple of those smaller banks went under and everybody thought there was regional and banking issue, every bank, including JP Morgan and Chase and Bank of America, and Bank of America and Citi, every single major bank in the US and elsewhere just nosedived. And there was a few of the bigger banks in the top 10 of the United States that if you just looked at their underlying earnings and their financials, nothing wrong whatsoever with them. Some of the tiny little banks were going under. So I scooped up a couple of the big major banks in the United States, and all those pay great dividends too. So yeah. I own a few of the big banks in my portfolio. One other one that gets a lot of hate on Twitter, and I don't care whatsoever because I love what it provides for me in my portfolio. Good old Verizon. Okay. $35 billion in revenue. And, they may have they may have high debt on their balance sheet and, slow growth, but I just want that money every single quarter that I know I'm going to get. Every single quarter that nice big dividend comes in, put it right back in. Coincidentally, keep paying my cell phone bill and my home wireless phone bill too. That is provided by them. So a little bit of I pay them, so I want them to pay me back a little bit too. But
turn that cash register around.
Yeah, it's funny. The Canadian equivalent, I believe, just reported earnings today or the other day. Is it Rogers, RCI, or or they want to,
Rogers is one of them. I'm not
yeah.
even sure who reported when or how
Or
recently.
I
Telus is another
know
one.
Rogers reported this week as well, and I think it was the same thing. It's like, are pretty much in line with what we were going to say. Crap load of revenue, crap load of profit. Here's your quarterly dividend. See you in another 3 months.
Yeah. So I want to circle back to REITs actually. So I have also over the last few years held several Canadian REITs. I've
Okay.
recently sold off, I think all of them except one, and I, I guess getting back to sort of the inflation and what's happened with interest rates, did like that's what really, my REITs over the last few years took quite a kicking
Sure.
because of the interest rates going crazy high. Um, did you find that as well?
I think the REIT industry has struggled with the high interest rates. It prevents them from adding capital or investing their capital back into the business and expanding. So the high interest rates, like it does with many corporations, has a big impact on future growth. Some of them have taken some pretty big hits. Again, that's why I just like to be very careful in the ones I choose. I like to know what I'm investing in, and that I believe that their business is not at risk of going away anytime soon or being impacted, because there's some REITs out there that are purely based in residential companies or residential mortgages or things like that, whereas like mine are more big industrial REITs,
Right.
where I know the underlying businesses that they support are not going anywhere. And yeah, maybe they did take a little bit of a hit with the higher inflation, higher interest rates, but I also am very careful at my entry points on some of these. So I like to I scooped up Prologis when it had an unnecessary large dip, and I was just like, this is outrageous. This is fundamentally a very good company. They're everywhere. Their business is rock solid. So I scooped it up, and just again, it's about patience. It's doing pretty well, and it's going to continue to pay its quarterly dividends. So just again, I hate to say it's a timing thing, but I when I look at these larger companies, I do like to try and wait till I can find them at what I think is a little bit of a better value.
Right.
That's not to say that that's a foolproof way of investing. So that's not saying buy the dip or buy when things, because that's not a smart thing to do. But I think in certain cases with high quality, larger companies with good business models, it's not something that's going to typically be a bad thing for you.
Yeah, and so it seems 99.99 to 100% of people are convinced that in the U.S., the Federal Reserve, will cut rates in September. Today, the Bank of Canada cut rates for a second time, another 25 basis points earlier
Oh,
today.
wow. I didn't hear that. Wow. Okay.
And so they cut about a month or so ago as well. So prior to the first cut, we were at 5%, went down to 4.75%, and as of today, cut another 25 down to 4.5%. So that should help real estate, right?
Which I've heard is, and from my understanding, is a complete mess in Canada right now. But
oh yeah, oh yeah,
yeah. And it's not honestly any better here in the United States. It's clearly at one of its most unaffordable
yeah.
points in our nation's history, and it's tough. There's part of me that has a little bit of empathy for what Jerome Powell has to deal with. I think he's kind of your damned if you do and you're damned if you don't type of situation, where you could probably make the case that inflation hasn't cooled enough yet to lower rates. But you can't raise rates because you'll just destroy everything that's already happening. And the problem that'll exacerbate the problem even more. But you also can't
Act, right?
necessarily cut rates too quick, because then you're just adding fuel back to the fire. So
Yeah.
it's a really challenging situation, and I unfortunately I feel like we're always more reactive than proactive. So you kind of just you wait a little bit too late, and then for me that it just means that it just takes a little bit longer to recover from these ebb and flows. But
Yeah.
if I was Jerome Powell, I'd probably, if I had to make the decision today, what are we doing with the interest rates in the United States? Personally, I'd probably just say cut it cut 25 basis points. Let's lower it and see what happens.
Yeah.
Um,
Which does seem like everyone agrees that is what's going to happen in September.
Yeah, I think it's going to happen sooner than later. I think there's really no choice at this point, but we'll see. It may have a more detrimental effect.
Yeah. I also want to circle back to the telecoms. You were talking about Verizon, and the largest telecom provider here in Canada. Well, they're a media company now as well, Bell Canada. And
Yeah.
they've been around for, well, like probably close to 150 years now, if not more than 150. And I keep adding to my position, and all the Canadians on X are like, Dave, you're crazy. Why haven't you sold out of Bell? And I'm like, yeah, they're trading at a 52-week low or near it, like they have been for a few months now. I'm happy to dollar cost average down. Like you said, I pay my cell phone bill to them, so I'm happy to turn that cash register around, let them pay me a dividend every 3 months. And very similar, like basically when you were talking about Verizon, I was like hearing everything I've been telling myself about Bell, right? I was like,
It is, and I get it. The people out there that are haters because these companies just their 5 year total growth compared to just the index. Again, it goes back to like, what should have just put it in the index fund. Well, that's fine. I get more quarterly income from Verizon than I would from the index fund, and right now that's what I'm trying to do in that particular portfolio, is to generate income. That's what I want to do. That's part of my plan to become financially stable and free, is keep paying myself in any way, shape, or form outside of my basic 9 to 5 income. So Verizon does that. My REITs do that. My big banks do that. And that's kind of what I'm trying to do, is just, and I've seen the progress. I track it like you do, and like I know a lot of others do. I use my Excel spreadsheets, and I monitor my income month after month, year after year, and it seems to be working just fine for me. That graph is, it's doing what it's meant to do. So I see no reason for me to change my strategy at this point. Like I said, I have my large chunk in the index fund, and I'm going to let that do its thing. But I also have my side portfolio for my income, and that's part of a major part of my financial independence plan. So I'm not changing that anytime soon.
Awesome. I knew he was going to do that. So I do want to, he'll come down here in a minute.
That's all good.
When we were talking about REITs, I shouted out Vici, and I know you didn't hear me because we were kind of talking at the same time, but I just wanted to circle back and get your thoughts on that one, because that's another kind of popular one on X. And it's also exciting, right? It's like owning the Las Vegas Strip. So honestly, I don't know enough about it myself, other than basically what I just said, Vici and Las Vegas. So I don't know. Can you maybe educate me more, or give us?
Yeah, I mean, there's a few of those out there. I think there's another REIT out there, GLPI, Gaming Leisure Properties. They're also another one. They like it's similar. It's like casinos and other things like that. There are a few out there. I mean, they're money printing machines. I think they're great investments for anyone who's looking for a little bit of exposure to that industry. On the growth side of things, there's individual companies where you can find that too. I mean, I was previously, and may do it again in the future, an owner of DraftKings stock. So instead of, they're more of the growth side of that business, whereas like what you're talking about in GLPI, and maybe is Vicky one of them too? I'm not even. It might be. Those traditional, all the big casinos, and they print money. They're profit machines too. All those casinos, they make good money. So, and they pay their quarterly dividends. So I like them. It's a great way to, again, diversify your portfolio, get exposure to a different industry. Um, like I said, looping back to DraftKings, there's a couple of those, out there too that are similar to that, and they're more of like the growth mindset where, DraftKings is trying to get into every state in the country, trying to expand elsewhere to online gaming, online gambling, and all the rest of that. So, good. I like them all. I'm hard pressed to find many industries I don't like. That'd probably be an interesting question for me to think about: is what industries do I not want exposure to right now?
Yeah, I was just thinking about that, like the diversification aspect. Like, obviously, within ETFs, you're usually somewhat diversified just from what they have, or like you said, if you're in Inspire or VOO, you're probably quite well diversified. But I just kind of randomly thought something like oil and gas. We haven't talked about that, but there's
Yeah.
an industry, right? Like, I don't know, just some quick thoughts on oil and gas, just for fun.
I have so many oil and gas and exploration stocks and energy utility stocks on my watch list. I get every Exxon, Chevron, BP, Total, Occidental Petroleum, all those, all the midstream partners, or all the, the MLPs, and Duke Energy and Dominion Energy, and et cetera, et cetera. So all those are almost every single major one is on my watch list. Again, good, profitable businesses, not going anywhere anytime soon, paying their dividends. I actually don't have in my individual portfolio exposure to those yet, but they're on my watch list, and I've come very, very close a couple times. I almost did with Exxon earlier this year, which would have been a great play. I almost did it with a couple of those energy, oil, drilling, and exploration companies last year or earlier this year as well. So love the industry. Obviously not going anywhere anytime soon.
Yeah.
Utilities have taken a big hit also. They're struggling right now, but they'll probably make their rebound at some point too. Our dependence on energy isn't going anywhere. We love to consume here in the United States and elsewhere. So, would love to add one or two of those to my portfolio at some point. Warren Buffett has his stake in Occidental Petroleum, so I like to think he knows what he's doing too.
Right.
He loves insurance. He loves consumer, needs, and energy is one of them. So yeah, great stuff there too. Just waiting till I find the right one, but it'll become a member of my portfolio at some point. I guarantee it.
Right. Yeah. So I'm down to just one utility left. I sold off some oil and gas and
Nice.
some others. And quite honestly, the biggest reason I sold a whole bunch of stuff off here over these last 2 weeks, I think from seeing my posts, is I was just purging that I had too many positions, trying to keep track of too many different things. I just need to get this down to a much more manageable number. And I think as of today, I'm down to 7 in my TFSA, which is
wow. Okay.
And I think only 2 left in my RRSP. So I'm now like under 10 total, which is 100% more manageable.
Yes.
And yeah, right. So, but sorry, circling back to that one utility that I still have is called Hydro One, which is basically the electricity supplier for all of Ontario. Like, pretty much if you live in Ontario, you pay your hydro bill, your electric bill to Hydro One. I pay it. Every neighbor of mine pays it to Hydro One. All of my family members pay it to Hydro One. Everybody that I know pays their electric bill in Ontario to Hydro One. So I'm like, why wouldn't I? And they pay a decent dividend. It's like it's not a huge yield dividend, but you know what? I'll take it. Every 3 months they throw some cash into my account, so why not?
Yeah.
And I really feel that in 10 years time, I don't see any reason why that stock isn't going to maybe double in price, maybe not double, but I just don't see how it doesn't go up and up and up over the course of the next 10 years, right?
They're all very much likely to do so at some point in time. Like you said, zoom out, look at any of these charts for individual companies, for the indexes. They're going to have their moments. So it's just like I think it's good that you streamline your portfolio, because it helps you to not have to keep track of so many different things, so that when the members of your portfolio that you do have are going through their ebbs and flows, you know when to buy, you know when to sell, you know when to add to the position, you know what, whether to liquidate it and move on to something else. So I love that idea. I'm not at that point yet. It's something that's crossed my mind, but I want to say I probably have, if I had to take a guess, maybe around like 15 to 20 positions in my main portfolio. So it's still manageable for me right now, but there are definitely a couple in my portfolio that I wouldn't mind purging. They're kind of just, they're not thrilling to me. They do provide their quarterly income, but they're not super interesting to me anymore. So I may probably by the end of the year liquidate a couple positions in my portfolio. Especially there is one that I will probably wind up taking a small loss on, and that'll help offset some of the capital gains from elsewhere. So yeah, 7 is awesome. That if I could hyper focus.
9.
Yeah, or 9, even 9, like under 10.
7
very,
plus
very
2 is
manageable.
9.
Very manageable.
Yeah. And so in my RSP is that JEPQ, because that's the account that Canadians should be buying their US positions in. And then the other position in that is one of the Canadian banks, CIBC. And then over in the TFSA, I've got, out of those 7, I've got 2 more Canadian banks, Bank of Nova Scotia and Toronto Dominion. So, you were talking about all the big U.S. banks, like your, sorry, I can't remember which ones you had mentioned. I just want to get your thoughts, because obviously, being a big bank guy, you've probably looked at some of the Canadian banks as well.
Yeah, I mean, I'm very familiar with Bank of Nova Scotia, TD. There used to be TDs all over the place. I'm not even honestly sure if I see that many of them here, at least in my area of the States anymore. But I mean, I have one of the ones I own is Fifth Third Bank, Fifth Third National Bank, FITB. Again, after their massive dip in spring of last year, tremendous rebound, great dividend, great quarterly earnings reports the whole time since then. So I don't plan on selling that anytime soon. I plan on adding to it incrementally over time. So love Fifth Third Bank. I think they're definitely a top 10 bank in the United States. Another top 10 bank in the United States, Pittsburgh National, PNC Bank. Same thing. Honestly, I could go on and on. You just look at most of the major banks, the major U.S. banks. They really had that big hit last year, but haven't done anything other than print money and continue that profit machine rolling like banks love to do since then. So
that's the Canadian banks in a nutshell. They're just a license to print money, right?
And in my mind, it's like, to me, it's like people, you give them your money anyway, and they're using your money to make tremendous amounts of money themselves. So why even keep your money in the bank? Just invest in those banks and be a part of the profit machine yourself. To me, that's a no-brainer. I love big banks, and I don't think they're going away anytime soon, because they have quite a lot of power and money. So
the Canadian banks have the Canadian banks have the history too, right? Like, I'm not sure if you're aware. I'll just quickly, because I've been over this so many times, and actually shared it to Settling Nomads. He likes to update this every so often. Bank of Montreal paying a dividend since 1829.
Unreal.
Bank of Nova Scotia paying a dividend since 1832 or 33, 34, in that range. I believe Bank of CIBC, so Canadian Imperial Bank of Commerce, that's ticker symbol
Yep.
CM, and TD Toronto Dominion have been paying a dividend since the 1850s. And I believe,
That's incredible.
yeah, Royal Bank, which is actually the largest bank in Canada, the largest company in Canada, Royal Bank, is the youngest dividend payer of them all. I think it's 1871. So all of them
Uh,
paying a dividend for over 150 years. And like I said, Bank of Montreal closing in on that 200-year anniversary of paying a dividend. So just unreal history there.
yeah.
And so,
And
yeah,
it,
they're not going anywhere, right? They're not going
yeah,
anywhere anytime
the
soon.
only nerve-wracking thing about banks is obviously is how much bad debt is on their balance sheet, especially in the wake of the last 5 to 10 years, when inflation and interest rate and monetary easing has just been through the roof. How much
Yeah.
of that has been loaned out as bad debt? Obviously, the real estate crisis too. How much of that is how much commercial real estate debt do some of these banks have? So there are things that could make you nervous or pause, or on wanting to own them. But um, yeah,
So
you
before
just
the earnings calls on the Canadian banks, they actually announce the provisions they have for those bad debts. So
yep,
whatever the number is, just a brand, say 100 million or just a
yep.
billion dollars, whatever the random number is.
Same thing for the
Yeah.
U.S. banks too. Yeah,
And obviously that does make their share price drop almost always. Obviously, the bigger the number, the more that price could drop. And then all of a sudden, if they start easing off on those provisions, and then the share price is going to increase, right? Like just kind of simple math on that one.
yeah. The scary thing to me, though, and so like I'll just kind of switch it up really quick because I want to like
Sure.
say something that I see all around me all the time, which like terrifies me. So I'm a millennial, right in the heart of the millennial age range, and the we everybody boasts about how good the economy's been and this and that, and how much wealth has been made over the last few years. But you look around at the stats that show average incomes and average net worths and average household family debt and across all categories, and I hear it in conversations that I have with other people in my age group, and it's just like I don't think a lot of people are doing well out there financially. I don't think a
No,
lot of other peers in my age group are investing, if at all. I just don't. I don't. And we're about to move. Our age cohort is so massive. Once the baby boomers start to really die off and transfer that wealth, I know Gen X is champing at the bit to get it,
oh no,
but
we
just
we already know that we've been squeezed out.
yeah, like the millennial age group is so massive. We're the largest age group that will exist at least for now. Um, but I have conversations with coworkers who are my age group, and they don't even know what's in their 401k. They don't know what they're invested in. They have no brokerage account. They have no Roth IRA. I'm worried that they have tons of debt and they don't know what they're. It bothers me so much, and that's why I try to preach on X all the time about how important and financial education, financial literacy is, because it's so lacking. It's at like an astronomically bad level of people just don't know what to do, how to do it, why to do it, and it's remarkable to me that that's the situation that we're living in.
So we definitely live in a bubble, or we live in a
Yeah.
fishbowl in the FinX, the financial Twitter community,
Yep.
where everyone is investing, everyone is like encouraging each other, everyone is learning from each other. Like I said right off the top, even all these guests, everybody that's come on here on the podcast, including yourself now, that's shared knowledge and information, and it's great to learn. But yeah, 90 to 95% of people out there just don't think about it. They're not thinking about their future. They're not preparing. and it's really sad. And it does go back to, the education isn't there. You don't learn from your parents necessarily. Some people do. I've had some guests on here that have like, yeah, my dad taught me everything about investing,
Yeah,
but for the most part, people are
awesome.
like had no idea. Like their parents had no idea about investing. So how would they teach their kids?
Yeah,
Obviously, financial literacy is not taught in school.
no,
Not taught in school the way it should be. I think that
no.
is happening more and more these days, where school districts or jurisdictions are introducing the idea of a financial literacy course. I believe that's happened here in Ontario, where now
I hope
kids in
so.
high school have to have like a whatever it is, like a grade 10 or a grade 11 course
Yeah,
in just
personal
financial.
finance or whatever. Yeah.
Yeah.
I mean, it's needed. It's definitely needed. So, yeah. You got any fun ones for me? Want to switch it up a little bit?
Do you see the ticker going along the bottom of the screen? Do you want to read that out?
Yeah. So according to what Dividend Dave sees below, and what I see below is he will shave his head when he gets to 100,000 subscribers on YouTube. And just looking at him right now, I'd personally love to see that. So you got
I
the
would love to grow it out until we got there too, so it could be really long. And I will do it live. I will do that live on Twitter or X, live on YouTube, live on TikTok, whatever. Doesn't matter to me. I'll go live.
you'll it gives me the vibes of when you were a little bit younger, you Van Halen, just the 80s, like long hair, rock and roll. So that's the vibe I'm picking up, and I love it. But
Yeah,
I would pay to
definitely,
I would pay
definitely,
to see that shave. That'd be pretty funny. So
definitely. Van Halen was a big part of my childhood. 1984.
good guess, good guess.
Awesome. With that said, I appreciate you so much for coming on and being a guest here on the Passive Income Podcast. I truly appreciate you and spending your time here with me. And yeah, before we sign off, do you have anything else just open? Anything else to say, or just any closing thoughts?
Yeah, no, appreciate you having me on, Dave. Thank you. You know, so you're not on X and you come across this on YouTube, join X and join the X financial community. It's a great community. Everybody, for the most part, on there is trying to help share information. Talk about their thoughts on finance and investing and net wealth building. So
Yeah.
it's awesome. Educate yourselves, people. Read up on things. Become financially literate. Invest, and let's all make money and get rich and get financially independent together, because that'd be great. So
Let's end it there. Yeah, let's all make money together. I love it. Again, thank you so much. If you're still here watching on YouTube, be sure to hit that subscribe button below. Come back and watch me shave my head. All right.
awesome.
Thanks again. See you
Thanks,
guys and
Dave.
see everyone in the next one. Bye.